Okay. So I am going to get started at 7:32. So I am recording so that way I can send that to you guys afterwards and to anyone who missed it. Thank you all for joining. I know that Dan, I think that's you. I'm gonna go ahead and mute you right now. So thank you all for joining. I wanted to do this. I was actually watching a training not too long ago where somebody did one of these in person. I don't know if it was at her house or at her office location, but she did one of these seminars in person, and it was actually for sellers, but she mentioned doing it for buyers. And I was like, you know what? I've been speaking to a lot of buyers recently who are, a lot of them are first time home buyers. So I think everybody that is going to be on this is a first time home buyer. So you guys all have a lot of questions, and they're all great questions. And I answer them all, and then like something new comes up, and then I get that same question from somebody else. I'm like, you know what? I really wanted to just host this webinar to try to get all your questions answered in one place at one time, and have other experts in the industry on the call as well to go over all parts of the home buying process. So what I did was I have myself as a realtor. I have, I'll try to go in order of who's speaking. I have Catherine Green, and we'll just go ahead and start the presentation here. Okay, so I will go ahead and do the introductions. Let me get this out of here. Can you guys see that my participant screen? I hope not. I was just having that up so I could mute and unmute easily. So my name is Olivia, and I am somewhat of a newbie as a real estate agent. My 1 year anniversary is coming up, I think, within the next couple of days. That's terrible. I've gone through a lot in the last year that it flew by. But I've had my license for a year, but I have a great mentor who is actually my mother, who we work out of the same office in the same Long and Foster office in the Green Spring Valley location. And she has 33 years of experience. So she's been in this quite some time. She's experienced every situation possible, probably. And I actually wanted her to pop on here tonight, but she is going to a listing appointment. So she's getting busy all of a sudden. But I have her 33 years of experience to kind of back me. And I've learned so much from her over the last year. And but also from everybody else in my office too that has a lot of experience, and then some people that are new as well. So it's been neat going through the process with newer agents as well, the training process. So while I am new, I do have a lot of experience to back me and to a lot of expertise there. So I serve buyers and sellers in Baltimore County. We just moved to Harford County. So I am very open to helping people buy homes in other counties as well. So whether you're looking in Howard, Baltimore City, Baltimore County, Anne Arundel County, Carroll County. So, and a fun fact about myself is that I've moved 4 times in the last 4 years. And we just moved into our new home. I actually did a live video tour of our house today. And we now live in Fallston in Harford County. But I've moved 4 times in the last 4 years. And I actually had the pleasure of representing me and my own family in this house purchase just last week. And so that was a really good experience because we looked at 25 homes during COVID and during all of this. And it was just a really good experience to have as a newer agent. So that's my fun fact. Next, we have Catherine. And again, guys, my screen disappeared here, so I can't see. Okay, no one's chatting. All right, good. Catherine is a financial professional at Aspire Wealth, planner with 3 years of experience. She's also a Baltimore Real Producers 30 Under 30 honoree, and maybe she can speak a little bit more about that when she comes on for her slides. She has played viola and piano for 21 years, so that is pretty cool. I played clarinet in middle school, and I just recently found that at my parents' house, and I've been trying to teach myself again. So that's pretty neat. So she will be talking about the financial aspect and really the importance of saving up to buy your home and just kind of getting your financials in order to make such a huge decision and a huge purchase. So she'll be talking about that. Next, we have Dan. Dan is a senior mortgage consultant with 27 total years of experience, and he's been with Prosperity Home Mortgage for 19 of those years. So Prosperity Home Mortgage is the mortgage company that Long & Foster owns. So Dan is in one of the loan officers in my Greenspring office in Lutherville. But he also works out of the Timonium office as well. Dan, correct me if that is wrong. But and then his fun fact is he's been quarantined with his wife, and he sends these company-wide emails that just have little tidbits of funny things that are going on in his house with his wife and his family during this time. And then 2 of his 3 kids in Phoenix, Maryland. And then we have Christina Murati, who is also a senior mortgage consultant with Prosperity, and she has 8 total years of experience, all 8 of those years with Prosperity. And again, she is also in our office, along with Dan, and the Towson office. And growing up, she wanted to be president of the U.S. That's pretty cool. I can definitely see you being president, Christina. So Dan and Christina are both in our office, and they are absolutely fantastic, phenomenal. Their responsiveness and just being there for you at basically all times of day. I worked with Dan for the purchase of our home last week, and I mean, I would send him text at like 8:30 at night, and he would respond, and they're just super, super helpful. Christina's helped a couple of my buyers recently, and just very detail oriented, and both of them are just great to work with. Next, we have Paul, and he is a marketing specialist with 2 years of experience at Masters Title and Escrow in Baltimore City. And he has a 300-gallon saltwater fish tank in his living room, which I should have looked this up, but I can't really picture how big a 300-gallon saltwater fish tank is, but it sounds super large. So that's a fun fact about Paul. So he'll be talking about when you go to buy a home, you meet with a loan officer, and as well as you work with a title company to buy your home. So those are like the 2 main, other than the realtor, people when you're buying your home. So very, very important. He'll be going over the why using a good title company is important. And last but certainly not least is Scott Beckman, and he is a home inspector with BPG Inspections. He's licensed in VA and Maryland, and he actually lives in Virginia. And he is also a longtime friend of my husband. So that's how we met. And a fun fact about him, when he isn't conducting home inspections, he drives a hook and ladder fire truck in Baltimore City. So there we have it. That is all of our speakers for tonight. So I wanted this to kind of just be really laid back, really just open it to all of you guys as potential home buyers to ask questions. Hopefully we answer a lot of your questions during our slides. We're going to be talking about some tips and then some misconceptions or myths for each of our positions in the home buying process. So I am going to get started, but again, I want this to be kind of like informal. Again, pop in with questions during the webinar, and I will try my best to get to this chat when I can open up these controls here. Here we go. Okay, maybe I'll just keep that chat open. All right. So you guys can't see my like chat page, and do you only see the presentation? I just want to make sure you can only see the presentation because I don't want these boxes to be in the way. Go ahead and chat in the chat to make sure about that. And then if you want to ask a question during the presentation, feel free. I mean, I encourage you to write it down and ask during the Q&A at the end, but if you absolutely need to get that question out during the webinar, please feel free to unmute yourself and do so. All right, so I am going to get started here. And I have my chat open. Awesome, awesome, awesome. Okay. I just want to make sure you couldn't see like my participant page and my chat page here. So I am the realtor in this home buying situation. The first person you're probably going to reach out to is your realtor. So a lot of times you might not know one, but that's why I'm here. That's why I'm doing this tonight. So a lot of times you're going to talk to your realtor first because we will point you in the right direction to the mortgage company, the recommended mortgage company, and the recommended title company. And we're the person that makes the recommendations for your home inspector. And when it comes to the home inspection items, after the home inspection, we are the person that negotiates all of that with the selling realtor. We communicate with the listing agent on the house that you are buying so that you don't have to do any of that. We basically take all of the work off of your shoulders and we do it all. Buying a home is super stressful, and it's, again, one of the biggest decisions you'll ever make in your life, and one of the biggest purchases you'll ever make in your life. So we, as a realtor, we're here to take all of that stress off of you, as well as the loan officers and the title company and the home inspector and the financial advisor. We're all here to work for you and to make it a seamless process. A lot of times home buyers don't really understand the importance of using a realtor. So hopefully my tips and my misconceptions kind of clear that up. But also, we're just here to not have you have any of that stress on your shoulders, have to do any of the work. As an agent that works with a lot of buyers, we're here to do all the negotiation for you when you go to purchase your home, as far as purchase price goes and as far as the home inspection goes. So we are here to do all the negotiation. You don't have to worry about any of that. But my first tip is to choose an agent that will be flexible, will work for you, listen to your needs, and will be willing to go above and beyond to find your home. So, and then I kind of skipped to step 3 because it's okay to be picky. After all, it's going to hopefully be your forever home. And, don't worry about saying, I need this amount of land, or I need this size home, I need this many bedrooms, because again, this is one of the biggest purchases of your life. So you should be getting what you want and you should be picky. Now, in this type of situation where we are low in inventory and it's a seller's market, sometimes you might have to negotiate or compromise on certain things that you want. You have your must-haves, but then you have your things that you'd like to have, and you might have to compromise on those things that you would like to have because of the low inventory situation. But you want to choose an agent that is going to support all of your decisions, and support your best interest when you're buying your home. So that's super important. Then you want to build a relationship with an agent that, again, will work for you daily, not just somebody who is going to work for you like when you're asking questions, or when when you need them, but somebody that's going to check in with you daily and have that open lines of communication. That is super important. Have an agent there that's going to continuously ask you questions about what it is you're looking for to ensure that they understand your needs and ensure that they create a search that is tailored to your needs. So somebody that's going to check in with you daily, and not just when it's kind of convenient for them. Again, it's okay to be picky. And lastly, ask as many questions as possible. And I put this in all caps because I find that some people, some first-time home buyers, and it's completely new. It's completely new, and I need you to ask questions. I need you to, and no question is a dumb question. Please don't ever think that, because the realtor, we can't read your mind. We can't remember every little detail, and we could skip over something and we're like, maybe we just assume that. So please, please, please ask as many questions as possible. Again, no question is a dumb question. That goes for this webinar as well. So I encourage you guys to pop in, ask questions as we go and at the end of the Q&A, because that is what we're here for. Again, I'm probably rambling on. I'm gonna try to be as quick as possible. So here are my top 4 myths that I thought about. So my top misconception is that buyers think that they need to pay the realtor a commission, and that is incorrect. That's a myth. So when a home is listed, the seller is paying as high as 6% commission. Long and Foster is 5%. So we have a slightly lower commission. There are some agencies out there that do 6%. So the seller is actually paying all 5% of the commission. 2.5% of that goes to the listing agent, and 2.5% goes to the buyer's agent. And then a portion of each of those 2.5% goes to the broker, and then the other portion goes to the realtor. So it's actually split 4 different ways. So, but you as a buyer, you don't have to pay anything. You don't pay any commission. Your cost is obviously your home, your mortgage, your down payment, your closing cost, and your home inspection, and a few other things that come up when you're buying your home, but you in no way have to pay the realtor's commission. So usually a lot of people think that they do. And secondly, it's a lot of people think that it's cheaper to rent than to buy a home, and that is it's not always false. You could have a really low rent and it would be cheaper than buying a home. But in actuality, when you buy a home, you're going to be building equity. So when you go to sell that home, you are going to make a profit. And if you buy a home for $350,000, you could then sell it, in the future for more than that, but owe less. And so then you're getting a bigger profit. So when you rent, you don't get anything when you leave. But then there are some pros and cons to renting and owning a home as well. And some people just prefer to rent over own. But a lot of times it is cheaper to rent. To buy, sorry, I was reading the chat. A lot of times it is cheaper to have a mortgage payment than to pay rent. Next, signing an offer to purchase a home means you are automatically obligated to buy that home. So when you choose a home, I would write up the offer letter, and you'll sign everything. We will send it over to the listing agent, or I will send it over to the listing agent. Let's say our offer gets accepted and the seller signed the offer. So we've all signed this offer, which is now a contract. And a lot of times people think that that's the end all be all, and that's definitely not the case. there's a lot of things involved after a contract is signed, a home sale contract is signed. There's a home inspection. There's your financing. There's a lot of things that come up that make you not obligated to buy that home. So just because the sellers have said, yes, we will accept your offer, doesn't mean that, and everybody signs, it doesn't mean that you are, absolutely obligated to move forward in purchasing that home. But there's also a lot of other things that go into it too that we would discuss later on. So lastly, you need to apply for a loan at your personal bank or credit union. So I actually got this came up when I was talking to a potential buyer, and that is absolutely not the case. So if you have a credit union that you've used for a while, I made a cup of tea and I never drank any. So if you have a credit union that you've been working with for a while, or you bank, like for example, I personally bank at PNC, a lot of those places offer mortgages, but you are not obligated to use the bank or credit union that you bank with. And in fact, sometimes working with the big wigs and that it can become kind of impersonal, and they're only open during the week, and there's a lot of other things that are involved. But I just wanted to let you guys know that you absolutely do not have to use the bank that you bank with to get your mortgage or your loan. So those are just some myths that I thought about when I was going over this. And I hope that answers some of your questions. Again, number one is probably the most common. So that's why I put it as number one. So any questions at this time? Sarah, you're here but eating, so okay. Enjoy your dinner. All right, so I am going to unmute Catherine. Unmute. Oops. Why can't I unmute?
All right, there you go.
Okay, great. All right. All right, so go ahead, Catherine.
Okay, perfect. So just to give you guys a little bit of background. So as Olivia showed you, I've been in the financial business for about 3 years now, kind of helping people, especially in the real estate realm, kind of get familiar with their, hey Paul, with their finances and their future goals. So just a real quick, Olivia wanted me to kind of give her some tips and myths and things like that kind of come up when I'm talking to people about their finances. We'll start with the tips first. Like the biggest thing you can do is get a good grapple on your current financial situation. Whenever you're buying a home or whenever you're doing like a big life change, it's really important to understand your numbers. Where do I stand with my expenses? How much am I spending on a month-to-month basis? How much income do I have coming in? A lot of these questions kind of come down to, okay, what are my discretionary expenses? And there are definitely tools and tricks of the trade that you can use to kind of understand, am I on the right track for my goals? And that actually leads to tip number 2 is understanding your financial goals. So many times I sit down with people, especially when, we're having big life-changing events, kind of like buying a house, and they kind of go, I don't even know how this fits in. I know I should buy a house, or I know I want to buy a house, but I'm not sure where that fits into my goals and even a timeline for that. Or even an understanding of how much do I need and how much do I want to do and where do I want to live and things like that. And those are so important when you're trying to understand even long term. So if we're looking 30 years down the road, what does life look like? A lot of people give me a blank look like, what you talking about? Which is fair, right? That's a long way away. But it's always important to kind of sit down and draw out a map of what do I want and how does buying a house fit into that, right? As Olivia said when she was talking, a house is a great investment. It is a perfect first investment, right? Because it allows you to build that asset, right, on the side and have that for you in your future, right? The next thing that I would suggest is develop a strategy that implements your mortgage payment. So many times I have people who come in and they go, well, I have this mortgage payment. And I go, well, how much? And that is basically their monthly paycheck. And I'm sitting here going, okay, that doesn't leave us much room to do anything else. It's really important when you're looking at these numbers and going, okay, where does this fit into my budget? Those realities of where am I right now? Do I need to, can I do this right now? Should I do this right now? And going back to those numbers is really, really important. And the last tip I have is 3 to 6 months of savings is extremely helpful. I can't even tell you how many home buyers that come to me eventually and tell me how much they've spent, fixing up the house, or people who have rentals who come to me and say, I need to fix this up and it's costing me thousands. It really helps to have 3 to 6 months of your monthly budget put away. So if you're one of those folks that's spending, $5,000 a month, okay, well, we need to have a good 15,000 to 30,000 in savings. And that's just the realities of where we are right now. That way, when we come into really bad situations, or when we come into a thing like a pandemic, and we don't necessarily have ease of access to funds, we have 3 to 6 months and we can kind of brace ourselves a little bit better, and put ourselves on a more firm financial situation. And I know next you've got some myths to talk about. So if we want to go ahead and go on over to that, Olivia. Thanks. I get this a lot. It's too early to consider saving and putting towards my future home. I get that a lot, especially with people who are younger, who are just kind of like, I don't really care. I just kind of want to live my life right now. It's too early for me. I don't have to worry about that till later. And then all of a sudden later becomes now. And then we're sitting there going, wait a minute, what have I been doing? So even if home buying isn't for you for a few more years, it's really important to kind of put that in perspective and say, okay, well, realistically, what would I need if I were to go ahead and move into a home, right? Myth number 2, when I buy a home, I'll be set and can fix things up when I'm ready. It kind of goes back to myth number 1, right? Like, we always consider we don't do anything about an important situation until we get to at that important situation. And then when we get to that important situation, we find ourselves a little bit stuck and not sure what to do. I'm a big over preparer myself. I'm a big protection, a little bit of a protection freak, because I actually went through 2008 with my dad, who was in real estate. And I've seen that. I've seen what happens when you're a builder and a developer, and in 2008, everything kind of came crashing around us. It is important that we are aware of situations that might come up. And it is important that you, as a first-time home buyer, are aware of, okay, what could break in the first couple months that I'm in my house, or what could happen, or what do I need to fix? It's really important to understand those things so you can prepare for when you move in, and when you do have your forever home and your happy place. You've got those things kind of set up financially. Myth number 3, developing a long-term financial strategy is only for the ultra wealthy. I can't even tell you guys how many clients I've sat with who go, okay, well, I need $250,000 in assets in order to talk to you, right? And I go, no. And I think that that's what happens, is we get into a mindset of only those in a different tier than I am can start a financial strategy or have some kind of financial movement in place. They're the ones that need to worry about it, not me. And the reality is we do need to worry about this, right? Every individual needs to be aware of what's going on with their finances and how their finances are helping them with their goals. So specifically when you're looking at a home, make sure you're taking in everything and accounting for everything and saying, okay, what do I need? How much should I prep for? What's a reasonable amount to kind of put away in savings outside of closing costs, outside of everything else, so that in the first 6 months that I'm in this home, it's an enjoyable experience instead of a financially stressful one, because I'm not sure what's going to need to get fixed and I'm not sure what's going to happen. I can just enjoy the process of moving into my home. Okay. So those are some tips and tricks and myths that kind of come in with being a financial professional and what we're dealing with on a daily basis, especially with people who are trying to get into their homes and moving forward with their lives. So thank you, Olivia, for kind of having me and being able to talk to you guys. It's been great.
Sure. No problem. Thank you. All right. Christina and Dan.
Okay, so I'm gonna go ahead and do the tips and Dan's gonna do the myths.
Cool.
Hi everyone, I'm Christina Marati with Prosperity Home Mortgage. We again work right with Olivia in the office that she works out of right in Lutherville. And here are about 8 tips that are pretty important when you're going through the mortgage process or thinking about going through the mortgage process. So first and foremost, inform your mortgage consultant before making any changes to your employment. What's important for you to know is throughout the process, we do verifications of employment at the beginning of the process and then also at the end. So if you go through any sort of job change, we need to know about it. We also need to make sure that you are still employed throughout the process. And if you aren't employed, we can't use the income that you had previously were making beforehand. We always have to use your existing current income, okay? Tip number 2, don't stop making payments on existing accounts. Obviously, you know, stopping and not making any payments on your existing accounts could cause lates, and then therefore could affect your credit score, which ultimately really affects you applying for a loan and getting financing. Tip 3, don't make major purchases with credit, co-sign another person's loan, or max out existing credit cards. So what you need to know is that throughout the loan process, we constantly monitor active pulls on your credit. So we actually get an alert that alerts us that, hey, you know, this customer maybe went out and applied for an auto loan, and that requires us to ask you, did you apply for that auto loan? And if you did, do you still qualify for your mortgage? So keep in mind that, you know, any major purchases that you want to make on credit or co-sign another person's loan, please come to the loan officer first before you do these items, so you're not affecting your loan and affecting your ability to purchase a home. Tip 4, don't assume closing existing lines of credit or paying off collections will improve your score. Again, this is another situation where you want to come to your loan officer and consult with them about your credit and where it currently stands. Don't just assume that, hey, if I pay off this credit card or I get this collection paid off, that it's going to automatically improve your score, because it could possibly have a negative effect on your score. Just always come to us first. Tip 5, don't deplete your savings to pay off credit debts. I know that kind of sounds a little weird because you definitely want to reduce your debt, but you also don't want to deplete your savings, because maybe that savings you needed to actually purchase that house, or like Catherine was saying, you know, you need it for that 3 to 6 months of savings after you buy the actual house. So keep that in mind. Tip 6, don't make any large deposits into your bank account. So we need to be able to source any large deposits coming into your account. And if there are, we have to ask you for additional paperwork. This could become kind of a little bit frustrating to you and add another layer amongst all the other layers that you're kind of already going under when you purchase a home. And then tip 7, don't change bank accounts or transfer funds within existing accounts. So if you change your bank, you know, we're going to have to see the flow of money from one bank into another bank, provide statements for each. Same thing with transferring funds. It gets a little convoluted if you're constantly transferring funds. So you need to be able to provide all this extra paperwork, where if you would have just kept your money in the same account in the first place, it would have made your process a lot simpler and smoother. And then the last one I can't stress enough is to contact your mortgage consultant if you're concerned with something that might impact your loan. There are many different things that could possibly impact your loan. Obviously, credit, any large financial decisions, any purchases, things of that nature. You guys need to really reach out to us first before going forward and making that financial decision. And then that's it for tips and tricks.
Okay, good evening, everyone. Thanks for having me, Olivia. I'm going to go through some of the myths that people have over the years seem to kind of float around. One big one is that you need 20% down to buy a house. You do need 20% down to avoid something called PMI insurance, which is a fee that you pay when you're putting down less than 20%. But there are programs that you can get in with no money at all. There are grant programs, conventional loans will let you get in with as little as 3% down. There's FHA loans, 3.5% down. VA loans, you can finance the whole thing. There are grant programs. You qualify for a lot of them. If you talk to Christina, I mean, we can kind of set you up, point you in the right direction. Number two, low down payment options are only available for first-time home buyers. I hear that a lot, especially with FHA loans, which is a typical first-time buyer loan. You can buy a house with an FHA loan, sell it, and then buy another house with an FHA loan if you haven't saved up enough money or built up enough equity. So there's a lot of different options there. Number three, lenders use your best credit scores. Lenders pull your credit from Equifax, TransUnion, and Experian. There's 3 different bureaus, and we have to use the middle score. And if there's 2 buyers, we have to use the lower middle score of the 2 buyers. So it's good to know what all 3 of your scores are, and we're glad to pull your credit report for you as you're getting ready. There's also ways to get your score up. So if you're going to buy like in August, it's good to pull it now and start preparing, know what to pay down and things like that. The rate you're quoted is the rate you'll get on your home. That's myth number 4. The rate you're quoted is typically going to be the rate that's available at the time that it's quoted. The rates change every day and sometimes more than once a day. Right now with good credit, you're up down to around 3.25%, which is the lowest it's been in probably the last since probably 25 years or more. So it's a great time to buy. Depending on your credit score and how much you're putting down and things like that, that'll affect the rate as well. Real estate agents don't care what lender you use. Myth number 5. Number 1, most realtors, and Olivia has noticed this as well, I mentioned that. Most realtors want to deal with a lender that they've dealt with before, or they know, or they trust. If they don't know you and you're local, then you'll have an advantage. Most realtors do not want to deal with a lender who's out of state. And the reason is, as Olivia said in the beginning, she's kind of the conductor for the whole thing. She keeps everyone in line. If you're working with a lender who's out of state, then if anything happens, if there's an issue, it's less control for Olivia. So whereas she can walk into my office or Christina's office and ask us what's going on, an out-of-state lender who she's not familiar with is not going to be as responsive typically. Number 6, pre-qualification means you are fully approved to buy a home. Pre-qualification means different things to different lenders. It normally means you've been asked a few questions, maybe had your credit pulled, and you have a general idea of what you would be approved for. We like to get you pre-approved, and that means to us, we've pulled your credit, looked at your income documents, your pay stubs, your tax returns, things like that, looked at your asset accounts, and really figured out how everything is going to come together and how you're going to get to closing. It's really important, especially now. It's very competitive. If we can get you pre-approved and you get a house, you're interested in a house that has several different people competing for it, we can write a real strong letter, and it's going to put you ahead of the other people. Number 7, there's a zero advantage to getting pre-approved. You really want to get pre-approved. If you're not, you're kind of taking a stab in the dark. You're looking at houses that you might not be approved for. You might not be comfortable with the payment. So a really important first step is to get pre-approved. When we do it, there's no fee, there's no obligation. You could get pre-approved today and never buy or not buy till the fall. But it's really important to get all your ducks in a row, know what your options are, and get things straight first. It makes it a lot smoother. In a competitive situation, the highest offer wins. The highest offer is very helpful. Sometimes the highest offer is suspect. If it goes way over what they're asking, the house has to appraise anyhow. And there are other things that a seller looks at. A higher offer for someone who's not approved is not going to carry as much weight as an offer that's close, but from someone who is approved, and everything's already been done. There are things like how flexible you are as a buyer. You might have a seller who wants to close fast. And if you're flexible and can close fast, that's going to help even if you don't have the highest offer. If you can wait while they find a house or whatever they want to do because they want to close more in the future, then that'll give you an advantage. So there's a lot of different ways to tweak your offer, even if it's not the best offer. And the ninth myth, everyone gets the same interest rate. That used to be true. In the old days, everyone had the same rate. Didn't really matter too much what your credit was or how much you were putting down. Now rates are, they kind of fluctuate every day, and they are impacted by primarily your credit score. The higher the score, for those of you who know your credit score, you want to be at least at 640 now. Sometimes it goes lower, but right now 640 is the lowest for most loan programs. And if you're up in the 700 range or mid 700s, it's going to get you a better rate and give you more options. And there are ways to get your credit score up, which Christina and I can help you out with. And that's pretty much it. Any questions as far as mortgages go, or do you want to do that at the end, Olivia?
I mean, if anyone has questions now, they can surely hop in and ask, or we can save it to the end.
Okay.
All right. All righty. Paul.
How's it going, guys? Paul Sellers. I work for Master Title and Escrow. So the importance of choosing a good title company, we're the last line of defense. So I like to give it an analogy. Essentially, it's like if you were to go to buy a car, everybody's probably bought a car by now. You want to know where the car's been. You want to check the Carfax. So you want to know where the car's been. You want to know who's owned it. You want to know, like, there's been an accident. You want to know the facts of the car's life. There's no difference between that and the house. So that's basically what we do for the house. We make sure that we check the history of the house. So make sure there's no judgments or liens. Make sure that people actually own the house. So it's like if you go buy a car off of Craigslist or something and the guy's like trying to sell it to you, but the car's stolen, you really don't own it. They can do that with the house as well. And that's basically what we make sure that you don't fall into that trap. We search the title back for 40 years. So we make sure the last 40 years, the chain of ownership is proven. We handled the disbursement of the capital. So when you go to pay for the house, you can't just hand them a stack of cash. We handle all of the wire transfers and things like that between you, the bank, and the buyers and the sellers. The most important part, we give you the keys. So we show up to the settlement, we go through all the paperwork of the contract, we make sure that you're aware of everything, the amortization of the loans, whatever it may be. We'll go through the entire contract with you as fast or as slow as you'd like. And then at the end, we give you the keys and you're good to go. Myth. So basically, when you go to buy a house, you have to have a lender's title insurance policy. And there's two. There's a lender's title insurance policy and an owner's title insurance policy. The lender's one is exactly what it sounds like. It protects the lenders in case something has happened. So the lender's their money is taken care of. They're safe. But as far as the owner, you would lose your money if something had happened. So say if you're sitting in your house one day and you just purchased the house and you didn't take the owner's title insurance, and someone knocks at the door and they say that they own part of your house. There could have been two sisters, and one of the sisters forged the other sister's signature, and then the next thing you know, this lady at your front door owns a piece of your property, and she does because you don't have the insurance on it. The owner's policy is optional, so you have the option to buy it, to take it, or leave it. It's a one-time fee, so I mean it makes sense just to get it so you're protected. It lasts the entire duration of the time that you own that property. Is there another one?
I was muted, sorry. There, I don't have anything else on there, but if you
Okay.
have
So-
more, go ahead, keep going.
Yeah, so basically the title company is the person that seals the deal. So, and to touch back on what Olivia and Christina were talking about earlier, if you use a lender that's local, it's so much easier for us to get your deals done. When we're trying to close in your home, it's a very long process, and people get frustrated. And if you're using, say, I have a lot of problems with Navy Federal. So if you're using like Navy Federal Bank, right? And you're like, okay, I'm closing today. It's May 21st. And on May 20th, Navy Federal decides that, I mean, they go home at 5. They don't care. They're in Nebraska or wherever they may be, but we can't get a hold of them. So we have no like closing instructions. We have nothing, and we can't get a hold of them. That's going to back your whole process up. So whereas we're supposed to close on the 21st, we're now closing on the 23rd. There is no price that I can say, like no percentage point that is worth using a big bank like that. Use your local people that you can call that are going to answer the phone at 7 o'clock at night, or they're going to be available to you to get the deal done because they're actual humans that you've spoken to. Like they're in front of you. They're here. A lot of times before COVID, you'd go to settlement. So like you'd see them at settlement, you know, and these people, local lenders, are going to make your life exponentially easier. I can't like touch on that enough, especially like dealing with the title company issues. We can't get a hold of like Navy Federal or SunTrust. I can't tell you how many times I've had to delay settlement because someone, a new home buyer, decided that they wanted to save a 0.25% by using a big bank. And then in the end, they're like, oh my goodness, I wish I would have never done that. I wish I would have listened to you and went with somebody local, somebody that we can actually talk to, somebody that cares. Because in the end of the day, when you pick a lender, say you pick Christina wants to do a great job, and she wants to form a relationship with you, and she wants to be your lender for life. So this Navy Federal person on the other side of the phone, you'll never have that relationship with them. They won't give you the attention or the time or the detail. They won't care as much. I can promise you.
Yep.
That's all I got.
Cool. All right. Thank you. Okay. We got, last but not least, Scott. Do you know how to unmute?
Yep, I'm ready.
Yeah.
All right, good evening, everyone. Like Olivia said, my name is Scott Beckman with BPG Inspections. I've been doing this for a little over a year now. Just to go over a few tips and myths for your home inspection. Tip number 1, you want to be prepared to attend the inspection and ask a lot of questions. It lasts about 2 to 3 hours. And this is something that you can find out anything you need to know about the home, what light switches work, which outlets, different things about the roof, ages on the HVAC, the water heater, and such. We're there to try to get as much information as we can for you, so you and your realtor can proceed forward. Tip number 2, learn when to ask for a repair, take a credit, or leave it be. This is something your realtor will help you with. Depending on your background, just say you have a good friend that's a roofer and can get you a good deal on a roof and you need to have the roof replaced. That's something that the roof wouldn't be as big of an issue. Now, if you knew nobody and the roof needed to be replaced, that's something where you would have the realtor talk to the seller's agent to see if it would be better to have them give you a credit, kind of meet you halfway on the price, or to have it repaired or replaced. Number 3, if you have any concerns about the house prior to the inspection, it's good to let your inspector know. For example, I start in the basement and work my way up. If you had a major concern about the attic, you're going to be thinking about that attic during the whole inspection instead of concentrating on the inspection as we go item by item. So it's something good just to bring up if you have any questions. Tip number 4, make sure you're aware of what is and what is not covered in your home inspection. If you don't know, a home inspection is a non-invasive inspection. You can't see inside walls. We're not going to tear ceilings down. We're not going to tear up carpet. We're going to try to get into everything we can. attics, crawl spaces on the roof. We do offer a few additional items such as radon inspections, termite inspections. We have a few vendors that do structural engineers and also chimney inspections. So those are the kind of things that you want to make sure you know what's covered in your inspection. Another thing, for example, we don't inspect pools. So you want to have a third-party vendor come in and do a pool inspection, the house. So now we're going to go over a few myths. Myth number one, the home inspector will find every defect in your soon-to-be new home. I wish I could say we could find everything. Like I said, it's non-invasive, so we're not checking in walls, and we're there for 2 to 3 hours. We're going to try to get as much information on the house, ages, how much time you have left on certain items, but we can't imitate daily use. So the 2 to 3 hours we're there, we're going to flush toilets, run the tub, run the sinks. But if you have a husband, a wife, and 3 teenage girls, you're going to use a lot more water. You're going to put a lot of strain on the system. So you can't necessarily test it to the exact specifications of your family. So, but we will try to find as much as we can. Myth number 2, newly constructed or recently renovated houses do not need to be inspected. As much as we like to see that the new construction, the builders do everything like they're supposed to, they do make mistakes. And so do flippers and rehabbers. That's something we try to look at. They want to make the most money off the house as they can, so they're going to take some shortcuts. So we just want to go in there and make sure they did what they're supposed to do and everything's covered. We do also do phase inspections. So we do a pre-drywall where we go through, we're going to make sure everything, every outlet, every light fixture, every ceiling fan, junction box you have paid for is installed. Then we can go back and do a final as well as a 1-year warranty inspection. That's something where we go back and you're not paying for any of the repairs, the builders have to do. So it's something, if you're paying for a brand new house, you want to have a brand new house and, not have any issues. The 4th myth is home inspection will kill the deal of your new home. Our job's not to put down somebody's house. We're just there to find as much as we can, all the information we can on the house, and then explain the findings, which you'll work with your realtor and your seller to try to figure out what kind of issues you guys want to work out on. Like I said before, as far as getting credit back or even having them pay for something. Skip number 3. The inspector's job is to advise you whether or not to buy the house and how to negotiate a price. As an inspector, we try to stay in our lane. We're just trying to find out ages and how long your house and components in the house are going to last. We're going to give the information to you and your realtor, and they're going to proceed on how to ask as far as negotiating the price, or if it's something that it's really a big issue and you might want to just walk. But again, like I said, we try to stay in our lane and just provide the realtor and you as the buyer with as much information as you can and let you guys make the decision. Yeah.
All right. Thank you. Okay, so now is the time to ask your questions. So if you have a question, go ahead and unmute yourself. And again, like I said earlier, no question is a dumb question. Again, this is one of the biggest decisions you'll ever make in your life. So I encourage you to come on and ask your questions.
I have a question. A couple things that I've been like, window shopping houses on Zillow, Long & Foster, HomeSnap, and different apps for like home buying and stuff like that. So say we find a house that we like, but real estate is technically listing the house, or any other big competitor or a real estate competitor. Say we like that house, but it's not a Long & Foster and you're a Long & Foster agent. Can we still look at that house and or purchase that house?
Oh, absolutely. Yeah. Yep.
Okay.
Yeah.
Another question.
There's tons of brokerages out there. But yeah, absolutely.
Another question my husband had was, if we found a house that was in our budget, say he wanted a garage, but that house didn't have the garage, could that be included in the mortgage, or was that something we'd have to refinance down the road?
Oh, okay. So if you wanted to add a garage, yeah. I mean, you could. You could take a personal loan out. Like for example, my last house we got built and the basement wasn't finished, so we wanted to finish the basement. A year later, we took out a personal loan to finish that basement. You can also take out like a home equity loan as well.
Another question that I had is, who covers the cost if for parts that fail on the inspection? So essentially, like, I think he went over that actually.
So you said, so if like the roof is leaking, so the house needs a new roof, you're saying who covers that?
Yeah, or essentially the hot water heater isn't up to code. Or
Scott, if like something's not up to code, what?
Or something that has failed, or something that's broken, or something like that, who covers
We usually
the
find
expense for that?
a lot of things, not say terribly wrong, but just certain things that are maybe not up to code. As long as it's not a major safety issue,
Yeah.
you know, we're gonna point it out. That's what we try to explain to you is, you know, water heater, it might be $1,000 and it's on its last leg. Sometimes realtors do a home warranty for the house for like those appliances. If it's coming up to the end of its life, we're going to say, hey, this is something you might want to budget for. If we say we give you 15 things, some realtors might say pick, 3 or 5 things that are really important to you that you want to get taken care of. And then you either ask for money or you have them, fix it before. So I actually did an inspection for Olivia, their house. There was a few things with the roof. They asked the sellers to take care of it. And the sellers, had somebody come out, a roofer come out, fix it. And, fix it to their satisfaction. And, it was no money out of the buyer's pocket.
Okay. The other question I have is for the, I guess the realtor or the loan officer or whoever is essentially, if you're in the inspection and you do find something that is wrong, can you negotiate the price of the home? Like, so say it's listed for, 200,000, but because of either the true value of the home and you're like, no, they're going to have to end up putting a new roof on, or the basement's not really finished. Can you negotiate the value of a home either by inspection or by the appearance of the home?
Yeah, so usually you would so for example, there was probably 15 items that Scott pointed out on our inspection, but we took like the most important ones that a lot of times it's like roof leaks, or sometimes depending on like the loan, if like the deck railing is like falling off or whatever, like that would be a safety issue that would be important. So you would point out, you would say, hey, seller, this is what we would like your this is what we're requesting your sellers to fix. They can come back and say like, no, we're only going to do A, B, and C, but we're not going to do D and E. And then the buyer could say, okay, well, we need all 5 of them fixed, so we're going to get out of the contract. There's a lot of negotiation that takes place, but usually it's like, they either do the item or they don't, or you can again ask for like a credit, or come to terms on like a price. So if it's going to cost $10,000 to fix the roof, you could say, how about you give me 5 and we'll take care of the other $5,000. So you can negotiate. There's a lot of different ways you can negotiate. And it could be on house price, but I feel like usually it's more so like on the items themselves and like getting a credit than, lowering the house price.
Okay.
Does that answer that?
Yeah. Another thing that my brother told me, he just bought a house like 2 years ago, was that if you're a first-time home buyer, they tend to not let you look at houses or even consider houses that are considered foreclosures.
Dan or Christina, could you?
Well, you can look at it. If you say I want to look at foreclosures, you can certainly look at them. The the reason that they might not want a first-time home buyer looking at them is foreclosures are usually not in great shape, just because the person had to leave. They don't normally fix it up before they leave. So it needs a little work. And most first-time home buyers use FHA loans, and FHA loans are a little pickier on the condition of the house. So they might call for repairs that you don't even call for. And since a foreclosure house is owned by the bank and not a person, most banks say it's as is, we're not doing anything. So you go in, you fall in love with a house and need some work, and you're kind of stuck unless, and one thing Christina mentioned on the chat was you could get a renovation loan, and that's one way to do it. But first-time home buyers can look at foreclosures. It's just a little more to look out for.
Also,
Okay,
I
I
think
think-
with the closing cost too, a lot of times if you can't really ask for closing cost help, right? From the
I think, no, my brother actually ended up getting that or something. Like they just wanted to settle on the house and they ended up paying their closing costs. So they didn't have to put anything down.
Okay.
Some banks will and some banks won't.
Yeah.
Some banks will limit, like FHA says the seller can kick in up to 6% of the sale price, which is fine, but a lot of banks draw the line at 0 or maybe even or maybe just 3%.
Okay.
Does that answer your question?
Yeah, so essentially there's a very slim chance that anybody could get away with not having to put anything down.
No down payment at all?
Yeah, like my brother ended up lucking out by not having to put any closing costs down. Obviously he paid his inspection fee, his termite fee.
but not the down
Yeah.
payment.
So
I don't know if he had it down. I think it was like it was like a very
Yeah,
small percentage.
yeah.
He ended up putting down $1,500 on his home.
wow. Yeah, he might have done like a 3% down loan or 3.5% down loan.
I think he did
Then got the seller to
3.
pay- And then got the seller to pay the closing costs.
Yeah, they got the seller to pay the closing costs. His house was like, I think like 100. It was like lower than 2,000. I think it was like 174.
Wow.
And they paid the closing costs, and he ended up putting like 1,500 down.
Mm-hmm.
Yep.
I mean,
Yeah.
and there's other loans, VA loans that's 0 down. And one
Well,
of them
I'm not a veteran, so I don't think
yeah.
that.
Then
It's
Then,
also possible that there's like down payment assistance out there too. So like you can get part of your down payment covered, and then you would only have like a portion of the down payment that you would have to come out of pocket for. So like it's possible as well. The trouble is when you talk to people about what they financed, they don't exactly tell you the full picture. So that's why it's best to talk to Dan or I and kind of get your picture and what that looks like, and then we can help explore options to help minimize your costs when buying a home.
Okay. So technically I still could, on top of my loan, apply for like a grant or something like that to
Sure.
put either towards my house or my down payment or something like that.
Absolutely. We just have to make sure that, you know, the grant or the down payment assistance program that you're going to try and apply for, that you qualify with parameters.
What are the considerations for qualifying?
I mean, it could be a various things. Sometimes it's location for grants. Sometimes it's income requirements. It could also be asset requirements. It just depends. So, you know, when you're really getting started, you want to talk to Dan or I, and then that way we can align you with the down payment assistance programs or grants that meet your criteria.
Yeah, the one thing that my husband and I are working on right now is just saving at this point. You know, we've got like a pretty good hold on eliminating unnecessary debt, like
Right.
credit card debt and stuff like that. We're now at the stage where we're ready to just like massively save.
Good for you. That's awesome.
Thanks. Thank you.
You're
Any
welcome.
other questions? Those were all great questions, by the way, Sarah.
Yeah.
Yeah, I wanted to ask about the you had mentioned something about avoid transfers of funds between existing accounts and large deposits. What I didn't quite wrap my head around all that.
Yeah, so I will go ahead and address that one. So a lot of times, or some of the time, we have a borrower who might have 3 different bank accounts, for example, and they're continually transferring $500 here and there, or $200 on this day, and then $300 a couple weeks from now. The issue is that when we go through the loan process and we go through the documentation, I'm going to look at your paperwork, but also someone called an underwriter looks at your paperwork, and they are actually the final person who signs off on everything. So they're going to be looking at the movement of money and trying to trace all of this movement of money that is going to be used to purchase this home and obtain this loan. So when we get into the movements of money, the reason why we say, limit what you're depositing or limit your transfers of money is because it requires me to have to come to you and ask you for more documentation. And it can become quite tedious sometimes. So in order to kind of just simplify the process, if you just kind of keep your funds in one account, and then we can document different accounts, and then we can, like let's say you need $10,000 and you have like 3,000 in one account, 3,000 in another account, and 4,000 in another account. You don't have to move around all that money. We can just document all those accounts, and we can see that you have enough money. And then after the approval has happened, then you can move all those accounts around or all those funds around to wire over your funds in one lump sum. The large deposits, we just want to be careful of, because if you're stowing away cash at home and you make a pretty large deposit during the loan process that's in cash, we have no way to track cash. We can't document cash. So whatever large deposit you're making into your bank account, you need to make sure that you can have it fully documented.
Okay.
Does that help?
Yeah, it's fine. I was just concerned because I kind of, I have 2 different savings accounts, and sometimes I'm putting money into that or pulling some money out of that, but I have like a main institution I use with my credit union where everything is sort of centralized, I guess.
Yeah, so even if you are transferring here and there, what you need to know is if you're transferring, we need to have both accounts, and we need to have the same time period for both accounts. So when you're checking, if you're sending me the 1st through the 30th, you can't send me the 15th through the 15th of the next month on the savings. We need to have the same time period. So if you're making transfers between accounts, we can see them and document them.
Okay.
To piggyback on his question, because I have the same situation where I have my primary bank account where my check gets deposited into, and like some bills get paid out of that, and then I have a financial credit union where I save and hoard money, and then only one of my personal loan comes out of that one. So I make cash deposits into that. I withdraw from my Bank of America immediately and then deposit into the First Financial one. Should I instead do like a cashier's check, so there's like a wire kind of like paper trail?
Yeah, so that's an excellent question. So if you are taking cash, if you're making a withdrawal on the same day and then going and depositing it into another account, that is traceable. I can go ahead and document that. It's when you withdraw $300, hold on to it for 3 months, and then deposit it later on, it becomes a little bit of an issue. So if transfer all on the same day, that's okay. That's okay.
Okay. Do they frown upon, like, so with my Bank of America, there's like obviously a lot more activity in that bank. What kind of activity do they not want to see as you're getting ready for a loan? Like, obviously, like, that's my primary bank account that I use for like day-to-day life. And then my First Financial one is mostly for my personal loan and hoarding money.
Yeah. So, I mean, good habits are definitely establishing savings patterns. You don't want to see you guys drain your accounts during the loan process or even before the loan process. Just establish, good savings patterns, or, even if you're not saving a lot before or during the loan process, just try and keep all your accounts the same. The moral of the story is when going through obtaining a loan is that you want to try and keep everything that you can possibly think of consistent.
Okay.
Anything that you kind of get a ding in your head and be like, oh, hey, this is off my normal path. That's something that you want to come to your loan officer and talk to us about.
Okay. Another my husband came down and asked, the question was, how much should we have getting ready? Okay. He wanted to know how much money should we have for the down or the all the costs that we're going to have in terms of buying the home, and then in addition to our savings, like a rainy day fund, like in total, what's a good like window that we should be hitting,
Boy.
like in terms of like saving right now?
That's a
really
loaded
good.
question.
Yeah.
Okay, so our
Yeah.
limit on our home is a $200,000 home. Obviously, when I meet with you guys in person, we'll go over the parameters and stuff like that. But he and I agree that our limit is like a $200,000 home. We'll probably do the FHA because this will be our first time buying a home. But we kind of want to know just like how much should we have in terms of like what should we have like ready for all of the costs we're going to have in terms of like the inspection fee, whatever, and then our rainy day fund.
Sure. So I feel like a lot of different people can contribute here because Olivia.
Because we don't want to, I guess he doesn't want to deplete everything.
Right. So there's a good, so if you like just saying $200,000, which, when you do meet with Dan and Christina, they could possibly be like, well, you could actually afford comfortably $250,000 or whatever. A lot of times that will change from what you think you can afford to what you actually can afford when you meet with them. But if you just say $200,000, then you say, okay, 3.5% of that. I can't do math in my head.
7,000.
7,000.
So then, closing cost. I think the rule of thumb is like 4%, but I think that's high.
You
Oh,
want me to go through it real quick?
Yeah.
Okay. So on a $200,000 house, you'd need 3.5%. So that's $7,000. That has to come from your own funds or a grant, and Christina touched on grants, or a gift from a relative. So that can come from you, a relative, or a grant. Then there's closing costs, and that's 4%.
Well, I'm moving because I want my husband to catch this because I'll try to repeat it and not repeat it right.
Okay.
Wherever he is.
Okay, so the 7,000 comes from you, a gift, or a grant, and then the rest would be closing costs. And on a $200,000 house, it's going to be a little more in the city and less in the county because of taxes, but it might be $8,000 or $9,000. That can come from your own savings, a gift or a grant, or from the seller. On an FHA, the seller can pay pretty much all of the closing costs. So that's, and then as far as rainy day funds and things like that, your financial advisor will help you with that, but we don't really know how much you should have set aside. I mean, a lot of people will use up just about all their money to buy a house and then start saving after that.
Mm-hmm.
Okay.
Zach, can you like quickly recap what you said to my husband?
Okay. On a $200,000 house.
Recording too. This is recording.
I'll be quick. $200,000 house, $7,000 is the down payment. That comes from a gift or your own savings or a grant. And then the rest is closing costs. And if you don't have that, you can get that from the seller. Does that make sense?
Yes, and you said also a grant as well.
A grant could pay for the closing costs or the down payment.
Okay.
But it's not always, but the seller's not obligated to pay all of your closing costs. So
Right.
they might not agree to that. And I can tell you in this situation that we're in now, it's very, there's lots of multiple offer situations. So the best offer, somebody not asking for all the closing costs versus somebody asking the seller for all the closing costs. Even if the price is high or whatever, they're probably going to go with the person asking for less closing help. So it's just a matter of, you know, the kind of market we're in and, you know, what's going to be like the most attractive offer. So you could be going up against like 3 or 4 other offers. So we would, you know, work together and make the best offer, but the seller's not obligated to pay all of the closing costs, but it is an option, which is what
Mhm.
Dan was talking about.
Okay.
All
Yeah.
right.
Thank you.
Sure. Any other questions, guys? And again, I recorded this, so I will send it out to everybody. And there was a couple of people that couldn't make it on, so I'll send it to them as well. But I hope this was helpful.
I have a question about grants. So I understand they can take, you know, different time frames, and I know that can affect, you know, you're getting a house or not. But like, what's like typical time to, you know, for a grant to go through?
It's about 45 days we ask for.
Mm-hmm.
Which is just a typical contract, to be honest with you.
Mhm.
Typical contracts are written to be closed between 30 and 45 days. We're pretty firm on 45 days for down payment assistance and grant money, because you have to remember that, you know, the lender has to approve you, and then we send all your paperwork to that entity who is providing the grant or the down payment assistance. And we also have to get the approval from them as well and get the funding from them. So it does take a little bit longer than just, you know, providing all the funds yourself.
Okay, thank you.
You're welcome.
So we are doing, everybody that attended, we're going to put everybody into a drawing for a $50 gift card to a restaurant of your choice. So, or carry out, I guess, at this point. Some place that does carry out. But yeah, so thank you guys so much for coming and bringing all of your great questions. And then thank you to my experts on the call that agreed to help me out and kind of go through the whole home buying process for you guys. I hope it was helpful. And again, I will send out the recording. And if you ever have any questions, I can just feel free to contact me whenever, and I can put you in touch with the person that will easily answer your question, you know, if I can't answer it for you. So thanks, guys.
Thank you.
Thank you. Have a great evening.
Thanks.
Thank you.
You too. Bye.